Good morning, family. Happy Tuesday. So, we know yesterday that the indexes here started firing those daily squeezes. Big day for the SPY, and especially a big day here yesterday for the Qs. But what's interesting about this morning is that the SPY futures are pretty much flat here. And then we take a look at the futures for tech in a bit of a different story, up about 1% this morning. So, it's starting to seem like, guys, you got a little bit of a divergence here where technology is kind of running away, where the market itself, not the case. Now, obviously, this can change before the open, but we take a look at some of these tech names, and we got a couple of things working here. One, we had daily squeezes. So as the Qs go into a squeeze, so does the Amazons, the Apples, etc. So we had a nice setup here in the names like Apple, names like Amazon, building up energy at the same time the index is, and now we're releasing that energy to the upside. Also interesting, guys, is that technology as a general statement kind of been lacking behind here for the last, call it, few weeks. The semis have been strong. We've seen other stocks like Peloton, etc., making some good moves. Technology is kind of chopping back and forth. Now you also have earnings coming up in a few weeks. So you combine the tech names lagging behind with a daily squeeze with earnings approaching, and then you sprinkle in some upgrades every morning. Good combination here for a move to the upside. But the thing to take into consideration is you want to be careful chasing this move. Now, extended can certainly get more and more extended, but we need to think about probabilities. So as a general rule of thumb, once we're 2 to 3 average true range moves away from that 21 EMA on the daily chart, we're a bit extended. Does not mean the move is over. It doesn't mean we don't go higher, but you want to be a little bit careful, guys, chasing into these super extended moves. If you watch yesterday's video, I kind of broke down what happens to the pricing of the options on the call side and the put side when you make a big move, and it's something y'all got to keep in mind. So my advice here, guys, is be a bit careful chasing this to the upside. Wait for a favorable entry, whether that be a pullback, whether that be everything kind of takes a breather and gives us 2 hour or 4 hour squeeze. Be a bit careful here about chasing into the momentum. And I think we can clearly see this morning that while the SPY is just sitting here slightly red, technology is running again. So in the event technology kind of loses some steam today, good chance we see some selling pressure across the board. So what I want to discuss with you guys this morning, and before I discuss this, I'm not saying the market's going to go lower, I'm not saying it's going to go higher, but as we're getting extended here, a lot of people start considering shorting the market. Here's my advice, guys. While this is certainly extended, and while it would make sense for us to kind of lose some steam here and begin to come back down to earth just a bit, at the same time, we are firing a daily squeeze. So if there's ever an instance where we can make a pretty extended move, it's when we're firing a daily squeeze. So while we're extended, we want to take into consideration this daily squeeze could continue to pump. So my thought process is, guys, when you're looking to short a strong market that you think is extended, go with the safest route, right? Put the probabilities in your favor. And what I think here, from two different perspectives, what I think the safest and highest probability way to short the market would be with a call credit spread for two different reasons. One, we're firing a daily squeeze right here. So to try to call the top and buy puts could be a bit of a dangerous game. God forbid we continue to rally for a few more days, and then we kind of turn the corner. Your puts have already taken a complete beating. So we want to take into consideration that we are firing a daily squeeze. We could certainly continue to run here. The other thing we want to keep in mind is that with this nice 1, 2, 3, 4, now 5-day move to the upside, especially in the Qs, we got a lot of premium right now on the call side. So I'm a big fan, guys, that if you are looking to short the market right now, go the route of a call credit spread versus trying to time the top there and go with the puts. So because of the big move right now, calls are exploding, which means that they get nice and thick there on the premium side. Is an option seller, whether it's a put credit spread or a call credit spread, what I've really learned here, guys, over the last, call it 6 to 12 months, is the best time to sell a spread is when those options are exploding and when the implied volatility is going through the roof. Reason being is that you don't necessarily need the stock, in this case, we're thinking about selling a call credit spread. If we take advantage of the huge pump coming into these calls, we don't necessarily need the market to reverse. If it just takes a breather, we're going to make a lot of our premium simply on the implied volatility crush of the calls that we sold to somebody else. So what I have right here, guys, taking advantage of this kind of whole mindset. And what do we got there? Looks like some orders getting canceled. But what I have here, guys, from yesterday is 2 sets of call credit spreads on the Qs. So this is also a bit of a hedge Not really calling for the market to get wrecked from here, but I do think we're a bit extended. I think with the election coming up, with earnings coming up, we could take a breather over the next few weeks. I'm looking to take advantage of the implied volatility crush on these deep out the money calls there. And at the same time, it kind of serves as a hedge, giving me, call it an insurance policy, to keep on playing the market to the upside. So two different sets of call credit spreads, guys. One at 304 and then one at 308. So I got one just above the previous all-time high and then one a pretty good distance above the all-time high. So compared to yesterday's close, it's about, I think, 3% cushion and then about 4.5% cushion. Might be a little bit wrong on the math. But nonetheless, guys, you're typically not going to get a good risk reward selling calls this far out the money. The only reason we can pull that off right now is because of the super explosive move. Calls are exploding, implied volatility is going through the roof, and deep out the money calls that typically aren't worth all that much for a short period of time, assuming of course the market doesn't rally to those strikes, but for a short period of time, they're call it overvalued. That's my favorite time to sell them. So I'm gonna kind of head over here to the chain and I'll show you guys those positions real quick. But to me, guys, this puts the probabilities in your favor because you don't necessarily need the market to roll over. You can make your profit if we chop back and forth. You can even make your profit if we do go a little bit higher. So the probabilities kind of work in your favor, and we have to respect the fact that the market is firing a daily squeeze. There's no other setup, at least in my experience, that can take the market from extended to super extended in a short period of time. So keep it in mind. But what I got here, team, is October 23rd. That's the deep out the money there at 308. So that's a nice position. I like that one a lot. And then we got October 30th, which was the first one I put on yesterday. And I'm up there just above the all-time highs at 304. So you got to respect the current market environment. You got to respect the fact that when we're firing a daily squeeze, oh boy, can we pump. And the whole concept of extended can certainly get thrown out the window for a short period of time. So I think a little bit risky, guys. And again, I'm not saying the market's going lower. It's just a discussion here about how could we potentially short an extended market. I think a little bit risky to try to time the top here, getting naked puts, unless you're willing to accept the risk. Otherwise, you got probabilities in your favor with the call credit spread, a little bit less stressful. And the best part is, even if the market does continue to go up just a little bit, you can still sneak out of there with some profit. So hopefully that makes sense, guys. I appreciate you watching. Go ahead and subscribe. And for everybody in the Focus Trades group, we'll be live around 9 o'clock this morning. We'll do our pre-market prep. We'll trade the first hour, hour and a half of the session together and looking to put some work in. So have a good day, guys. Talk to y'all soon.